What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update video is we're going to be taking a look at that Ortex data going into next week's trading week. I do expect to see some more moves in this data, mainly to the upside in terms of the utilization, days to cover, and estimated short interest, but we're going to go over that a little bit later. We also have to talk about Max Payne. And we have two interesting situations going on with BlackRock. BlackRock is pulling about $2 trillion from State Street in their ETF side of their business. And it looks like BlackRock and a lot of other institutions are looking like they're going to be taking very significant losses due to their exposure on these Evergrande bonds. I know a lot of people have been talking about Evergrande over the last couple of weeks and months. Fitch recently came out and downgraded them, so it does look like they are going to default. But remember, we have not really seen any direct comments from Evergrande themselves. All we know is that they have not paid yet. And again, we also have to talk about a developing situation with this margin debt. Right now, I was reading a little bit of an article from JP Morgan. It doesn't necessarily look like the margin debt is really that out of whack, according to what we would typically see, but it is right about to get there or has the potential to really get out of hand. And in addition, we also have some updates that we need to talk about with these CITADEL lawsuits. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. Now, before we get into the rest of this video, I want to kind of go over some things that we need to be prepared for this week. We are going to be getting the Fed meeting, and we are going to get news about how fast the Fed is going to be speeding up the tapering of asset purchases. If this speeding up of the taper is a lot more than the market is going to be essentially pricing in, then we are going to see the market react negatively. But the thing that we most likely can expect going into this week is volatility. Over the next couple of days, we're probably going to start to see the market try to price in whatever Jerome Powell is going to say. So we're going to see moves up and moves down. But again, we are going to have to wait and see what happens at the Fed meeting. And remember, that was kind of the timetable that we were looking at to see volatility and then potentially the Santa rally going into the end of the year. Now, when we come over to the Ortex data, we're seeing the utilization at 77.57% with the amount of shorting and the price action that we've seen on AMC over the last couple of days. Well, I would expect the utilization to get at least back above 80 going through the end of next week. And again, with the estimated short interest, I would also expect to see above 19 and potentially even above 19.5%. We did see a little bit of a move on the days to cover on the 3-month time frame. It switched to 2, but when we switch to the days to cover on the 2-week, it looks like this number has also switched to around 2 as well. So there might be a little bit of another glitch going on with Ortex right now. We can see that both of these days to cover numbers are at 2. So let's see if they update it on Monday, because we did see different numbers, I believe, on Thursday of last week. Now, coming over to Max Payne, now, the December 17th options chain is a little bit different than what we've seen in the past. The strikes go all the way out to 145. So if people are really going to be YOLOing or gambling on weekly options, and the concentration of these contracts is going to be further out of the money, well, that means that the market makers don't have to pin the price of AMC at a lower price to get a lot of those call contracts out of the money, which is why we're seeing this Max Payne price at $35 a share. Now, we did previously see this at about 42, but with the price action that we've seen, the price is significantly lower than what we were trading at when we were seeing that $42 Max Payne. So people can buy contracts that are closer to the money for cheaper, but again, still a higher Max Payne. Let's see what happens. We could end up finishing at or above Max Payne going into the end of this week. Now, let's get into the situation surrounding BlackRock. Now, BlackRock is to pull $2 trillion of assets from State Street. Now, the reason why they are doing this is very interesting. State Street was the sole custodian for the investing firm's U.S. exchange-traded fund business for more than a decade. But the reason that they cite for this move out of State Street, in my opinion, is very weird. Typically, we would see something like, well, the fees are too high. We want to go somewhere with lower fees. We want to be able to make a little bit more money to basically scrape a little bit more off the top. But that's not essentially what they're saying. When we come down a little bit further, Derek Stein, BlackRock's global head of technology and operations, said the changes allow the ETF business to grow further and, quote, mitigate concentration risk. Meaning, well, it's kind of like putting all of your eggs in one basket. Remember, we just said that State Street was the sole custodian previously of a lot of BlackRock's ETF business side. So the fact that BlackRock is saying, we are going to now diversify this business to a couple of other institutions, Citigroup and JP Morgan, it kind of shows us that State Street could potentially be having some issues. Now, I know a lot of people have also speculated that State Street is also one of those institutions that is very over-leveraged on a lot of these shorts on potentially AMC or GameStop. But again, with the way our reporting standards are set up, it's very, very hard to know that. But State Street is pretty over-leveraged when you look at their derivatives exposure, which we have looked at a couple of times in the past when we talk about how Goldman Sachs is 133 to 1 levered up. So this is going to be a situation that we want to keep an eye on and kind of keep in our periphery going into the end of the year. The other thing that we need to talk about with BlackRock is this Evergrande situation. So Evergrande downgrade forces BlackRock and other institutions to write off billions. So when we come down a little bit further, it's a little bit of an interesting situation for BlackRock. It's also striking that although Chinese real estate giants have been in crisis for a long time, those funds bought additional securities even shortly before Evergrande's insolvency. BlackRock's portfolio, for example, saw a net addition of 31.3 million shares in Evergrande's bonds between January and August of 2021. The fund holds 1% of its portfolio assets in Evergrande. If those assets go to zero, that is going to hurt BlackRock. Now, BlackRock is huge. They're going to be fine. But if there are a lot of these other institutions like HSBC or a lot of these other institutions listed here, Ashmore Group, Allianz, UBS, well, these institutions are going to face issues. Now, I know there's been a lot of speculation as to Citadel's exposure on these Evergrande bonds as well. So if they have been using a lot of these bonds as collateral and a lot of other bonds as collateral as well that have essentially just became worthless, well, that is going to lead to more forced liquidations and more margin calls coming in the near future. Now, speaking of margin, when we come over to this article talking about the margin debt for JP Morgan, not for JP Morgan, but JP Morgan's comments on the margin debt nearing 1 trillion may not be a sign of euphoria. And they really cite in this article here velocity. So when we come and look at this little chart right here, the blue line is going to be the margin debt and the orange line is going to be the S&P 500. Now, we do see the margin debt really start to get overextended right around the times that we are seeing a crisis. Now, it's not necessarily the fact that it's getting overextended, it's disjointing from the moves in the overall S&P. We can kind of see it better in this chart here that the margin debt over the past couple of years has kind of tracked along with the S&P, but this little red spot right here shows that if the S&P is going to continue slowly moving up or staying flat and the margin debt continues to go up, well, that could then pose some issues. Now, again, the margin debt that we are seeing right here isn't necessarily the biggest thing that we need to be looking at in terms of the over leveraging of a lot of these institutions. We know that they have crazy amount of derivatives exposure, and if those aren't collateralized, well, that is going to be a very, very interesting situation once it comes time to either pay off these debts, roll over these contracts, which again, we've been talking about January 2021 or 2022 for a while now, and that is going to be the time where a lot of these contracts, not just options, are going to have to get rolled over, and that is going to maybe input a lot of buying volume back into AMC. Now, let's take a look at this quick Citadel update on this lawsuit with Citadel Air. So if you guys remember last week, we were talking about this lawsuit with Citadel, basically suing Citadel Air, a parody website, making fun of the amount of money that Citadel had, and basically them potentially, basically just a parody of them having their own airline. Now, Citadel Air is fighting back right now, so Citadel did win the first lawsuit, but when we take a look here, the lawsuit filed in federal district court in Arizona seeks to reverse the arbitration decision to keep the site online. In the lawsuit, Britt alleges this is simply a case of a multi-billion-dollar company trying to silence a private citizen who is critical of its operations and pokes fun at its CEO's extravagant lifestyle. What this really shows us right now is that the ape community, the retail investors, are so deep under Citadel's skin right now. They are doing a lot of very strange things that we really have not seen out of them in the past. They've come out with those Twitter storms. We see Ken Griffin going into these clubhouse calls talking about how he's basically playing his Xbox, buying games online, and that he doesn't have to go to a GameStop, making all of these wild statements, and it doesn't make a whole lot of sense. When you combine that with Citadel really decreasing the amount that their investors can pull from their fund, which some funds do from time to time, but right now, it's not the best time to be doing that. Additionally, what this really shows us is that the apes are not leaving. All of these large institutions think that they have so much power over the retail investor base and the everyday person, but we are fighting back and we are winning on this cause. When we see and take a look at just what the share price of AMC has done over this past year. When it started the year, it was sub $2, and it is now trading, it closed Friday at $27.44. And that's at a low. We have seen AMC go as high as $70 a share, even in that $70 range. And with all of these institutions buying on the way up, buying on the way down, they obviously see that it has a lot more potential to go to the upside over the next couple of months. So in my mind, we have a lot of really good things to look forward to. We have AMC continuously increasing their fundamental value as a company. We have retail investors continuously showing their support for this cause and the companies that we like, and we're not going anywhere. We have a lot of things that we need to accomplish over this next year, and we've accomplished a lot this year. We've seen all of those different proposed rule changes come out, get implemented and affected, and we would have not been able to see a lot of those things happen without the ape community. So that is mainly going to wrap up this update on AMC, BlackRock, the margin debt situation. So if you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great weekend, and I'll see you in the live stream tomorrow morning.